Yo, what's up, guys? Welcome to today's video. If you are new to the channel, watch videos that we've been posting on the channel. Overall, please don't like to like and subscribe. And also, we're gonna have the free community link, Telegram link, down in the description below, so you can join our free, group where we send signals on a daily basis. We send our analysis on a daily basis, and also some trades breakouts. And everything's for free. We don't sell any courses. We don't sell any signals. We just send our setups, and then how we see the market. Um, go which direction that we anticipate the market might go, and all those kind of things. But everything will be through ICC, because we're using ICC strategy to trade. So yeah, without any further ado, let's jump right into it. So today we're gonna be focusing on some trades breakouts, trades that we took yesterday on Monday. So you're gonna be focusing on those trades so you can get a better understanding, and see what works for you as a trader, and see what will work best for you in terms of understanding ICC, which is basically price action and market structure. Yeah, but at its simplest form, so you can get more into it. So I promised the group I'm gonna also do another video this week in terms of other tools that can help you, because I've realized most people don't understand the real concept around higher highs and higher lows, because it gets confusing once you start breaking it down into smaller time frames. So I will also help you guys with that. But for today, actually, I'm just gonna be breaking those three trades. Actually, starting with Dow Jones, and then Nasdaq, and then gold trade that we took on last week Friday, and then it ended up hitting TP yesterday morning on Monday, right? So as you look on, I'm just gonna delete, but let me just show you before I delete everything, so you can get a better understanding in terms of how the trade actually went. So this was the entry point, and then the trade was a good risk to reward kind of trade, but for me, it was basically 1:3, 1:4, somewhere there. Yeah, don't the stop loss was actually I moved it, to break even at some point, but my stop loss was basically just around here. So it was a good 1:4, actually. Yeah, it was a good 1:4 trade. So I'm just gonna start breaking everything down. I'm just gonna delete everything and then start from the top, right? So I'm just gonna do a top-down analysis. So as you can see, we've been having, the bullish momentum, or that bullish trend when it comes to US30. We've been bullish on US30 on a 4 hour. So what you wanna do is you wanna be able to scale down, so you can get to see the charts more, you're more and more clearer. But zoom in, actually, you want to be able to zoom in, understand when was the last higher high, when was higher low, because you're bullish, you expect to see those levels of higher highs, and higher lows. Those are the kind of level that you see. Okay, we had this high, the market corrected back to these lows, broke out, gave us an indication, and with the break, and then started to cock some kind of correction which happened, and then still from this area, it bought up back up to these areas. So you want to also, because there's not much information besides this, you want to also scale down to 1 hour, which is preferable, but you want to be also be in sync with the overall time frame in terms of the bigger time frames. You want to be in sync with that, but the 1 hour works best also. So yeah, we had that clean indication to the upside, having this higher high. The market started correcting in between here, and then the market shot up to these levels. So also going into this trade, We went a little bit down also further, like, okay, overall we bullish. So what you want to see is we want to see, the chart also being bullish. You understand? You want to see the chart also being bullish. So we see that the market came to this, with that indication, came to these levels, started correcting in between, this level of resistance and this level of support where the indication actually happened, and then um sorry about that. And then when he got to this level again, then we had more or less equal highs, and then it dropped down and it started to drop down. But then it respects this level of support. Then you can say, okay, since really we are in a downtrend, here the market has been going down, giving us that downtrend, and then respecting these levels, where are we looking to be able to take buys on the upside? Because overall we are bullish, and you want to see that that what is this, that time frame also, or you want to see that correlation between the time frames, so that is something that we've been looking at. That was something that we're anticipating coming into US30. So we scaled down even further. I wanted to also get like an inner level of resistance and support level where the price was bouncing off a little bit. And then I got this level here. I was like, okay, there's this level where the market actually came down, reacted off, and then created this high, and then broke down below to create this this low, and came back up to retest this level, and then we started having this was New York open, and then the market shot back up to these highs. But this wasn't an entry enough to say, look, we can get an entry, but we wanted to see the since well that the market proved that it can sell below this. But overall, we know that anything above this level of support, which is coming from the 4 hour where the indication actually happened, anything above it would be bullish. So the bigger time frame would have more control over this level than the smaller time frame, right? So looking into this, we went down into 5 minutes. So during New York session, we had a nice push to the upside. We had to wait it out. We had a nice push to the upside, and then we knew that, okay, anything above here would be bullish, because now we had an indication that buyers can step into this level of resistance. So anything above it would be bullish. So you would be you know you would want to buy actually around that level. So you want to be in sync with the overall time frame, which was the 4 hour and the 1 hour, which but by the time the 4 hour was the only one which is bullish, and then the 1 hour was still bearish because of this movement. So then, okay, it's like, okay, we need to break these highs, this lower high. We need to have a clean break of this lower high, and then probably a clean nice retest on a smaller time frame before the market can continue to rally up. So it's like, okay, we had that clean break above this level. As you can see, we had the clean break above this level. So it's like, okay, the entry which will come here, it will only come from this high. So we wait for the market to actually create that higher low on a 5 minute. But then I switched down to 1 minute. um I switched down to 1 minute. As you can see, I switched down to 1 minute, and then that's where the entry was actually coming from. They actually came from this higher high, but we had to wait it to correct first. Once it was correcting, and then we had to wait for the market execution at this level. We had to wait for the market execution at this level, and our TP was just around somewhere here. Yeah, our TP was just somewhere here, if I'm not mistaken. Yeah, our TP was just somewhere there, if I'm not mistaken. And then, like I said, the trade was mostly, 1:4. Yeah, the trade was mostly 1:4. So that's how the trade came about. So my stop loss was just below this level of resistance. But now, since the market was on the upside, it became a level of support. And now we know that, okay, based on this higher this break which came from this this higher high, and then this higher high, and also this higher low, and then this higher low, we most likely to push to the upside. You can see that buyers are actually in control, especially from that level of a support coming from the 4 hour, which I will show you just now. This level, yeah, coming from this level of support. So we know that, okay, anything above this level of support would be bullish. So now we are in correlation, in terms of the 30 minute, the 4 hour, in terms of the whole movement, and we're breaking these highs. We break in this lower high that was formed, and we broke above it, and anything above it will be bullish, because everything above the support will be bullish. So we needed that level where we can buy from, so we bought from that level. So that's where we took our entry, right? So I hope it's not complicated. Yeah, pretty much. But then we had the Nasdaq trade also that we did take also. So more or less the same thing with Nasdaq also. More or less the same thing. I will explain it also. Let's start from 4 hour. More or less the same thing also. We're bullish overall on the 4 hour on Nasdaq, and as you can see on 1 hour, also we're also bullish on 1 hour. So now we had a nice clean, higher high and higher low break with an indication to the upside, giving us that higher high and then higher low, and also a nice clean break to the upside. And then we anticipate, because the chart was here on Monday when everything was starting to happen. So it's like, okay, we need a level where we can say we can start buying from. Now we know that anything above these higher highs will be bullish because of that indication that came from the upside. So we need the chart to actually to come, to correct back into these highs. So whenever it breaks above these highs, we can then aim from this, and from that level where we had our level of support situated on a smaller time frame, we can have that level and then aim for the upside. So it's the same thing. We had that nice clean correction to the downside. This was a higher high, the indication which came from these highs, and then the market started to correct back into these levels. And then just about New York time, I don't think 9 a.m., the market started to shoot back up. But there was a level where we needed to say, okay, this level, whenever we break above it, we know that we're gonna be getting into those buys. Uh, all right. So we knew that whenever we get into that level, we know that we're gonna be getting into those buys. So as you can see on a 15-minute chart, remember we had this indication coming from these highs, creating that high. So we know that already anything above these highs will be bullish. So the market corrected nicely into this previous high, and then started to push to the upside. So we needed it to break this level, so we can be able to take buys to the upside. So we went down further down more into 5 minute. So we saw that this level, it's just between, you just above these highs where the indication came from. So overall, that's how the setup came about. But we also had to wait for the market to break above, give us a nice clean retest. So, but everything was also based on the 1 minute in terms of the entry side, how we took the entry. But we had to break above this lower high that was created. So we needed a break above that lower high, but so we can be able to take that trade nicely. And then the 1 minute actually gave us a nice clean entry in terms of how we were taking the entry. We needed that that retreat, that retest above that level, and then we hit that high, and that higher high actually, and that higher low on 1 minute. The market broke above, and then when it started to correct, and we started to to see it bouncing off this level, our stop loss was just below, and this trade was also 1:3, 1:4 trade that we took on Nasdaq yesterday. So, but I guess you can understand. But I'll give you a little bit better breakdown in terms of how you should be able to spot these kind of trades. But I was just giving you the insights on this trade, how it actually went down, right? So we also have the gold trade, which we actually let me see, which we actually took. But I'm just gonna show you the analysis. Uh, Let me see. Yeah, let's show you the analysis. Let me show you the analysis of the goal. Yeah. So this was the goal analysis that we had in terms of, taking a trade. We had this indication on the 4 hour. The market started to correct on the 1 hour, and then we had this level where price has been bouncing off, and anything below this would have been sales. You understand? Based off we had this high and this high in terms of these were equal highs. The market broke below, but because we had that initial indication, the market broke below that. But the market was creating lower lows, lower highs, lower lows, lower highs, lower lows, another lower high, because this was an equal high, and then it gave it it gave that lower low. But instead of giving it then went to create a lower high, but then it couldn't go create a lower low below this level, so it started to push to the upside. And once it started to push to the upside, we needed a break above, and then we scaled down to 15 minute, 5 minute, and then 1 minute, so we can take a trade on the upside on Friday. And that's how it happened. But overall, this is what how it looked. Let me just do it on another pair, because those are analysis in terms of how what we expect to see based on what's currently happening, right? But overall, this is how we got the trade. I'll be showing you how we got the trade. Okay, so as you can see on a 4 hour, let me just delete everything actually. On a 4 hour, we had gold, on a very bullish momentum to the upside. We had gold on a very bullish momentum to the upside. And then, as you can see, we had this level where gold gave an indication that above these levels, it can buy. It has momentum to buy, above those levels. It gave an indication. So we just need to wait for that, that correction that gold can provide to us. So gold did give us the clean correction that we were hoping for. It started to give us that clean correction that we were hoping for on a 1 hour. And I did mention that on a 1 hour, the 1 hour was bearish. But then we had this level where we had a lower low, the higher low actually, on a 4 hour, and the gold wasn't breaking that higher low. So and then we're like, okay, no problem. Let's focus on what's currently happening. I was like, okay, what's currently happening is gold is bearish, below this where the indication came from. Gold was bearish below this level when the indication actually came from. So now you can see where this level came from. It came from where the high was formed before the indication to the upside, where now we had another high, you know. So that is what was currently happening, where gold touched, that level, the 3,700, So this was on a 1 hour. It's like, okay, anything above here, anything above this size would be bullish. Anything above this size would be bullish. Since well, gold is not breaking these lows, we still bullish. You understand? Since well, it's just correct. This is just a correction. So we waited for gold to actually come and then once we started to see it push to the upside and break this level again, because it broke it the first time where the indication actually came from. This was this level, and then gave us that higher high. And then once gold got to that level, we started to scale down to 30 minutes, just to get a more broad view of the entry in terms of how we're gonna be, entering our trades. So actually the trade came actually from these, because now if you take a look at this low here, anything above these lows will also be a buy, because market came from to this level, started to shoot back up, shoot down. Whenever it touches this level on the upside, it will shoot back up, and whenever it touches this level on the downside, it will shoot down. So we needed it to break this level of highs. We had this. Remember, we had this lower highs, and then we had these higher highs. We needed to break about those higher highs, on a bigger time frame. So I deleted this. I was like, okay, anything above here would be bullish because of that, indication on a bigger time frame. So we scaled even further down on 15 minute to get that level, those indications, and that level where we can be able to get an entry, and which was this level based on this low. And then gold broke above, and then we switched to 5 minutes so we can get a much, 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 much better entry. So our entry actually came from this also. Once it broke above, we waited for it to actually come back down, create that, higher low before it can start to shoot back up. So we can have a nice entry and a stop loss. So our entry was there, our stop loss was just here. So our entry was here and our stop loss was just here. And then we aimed for 3,700. That was our entry, and our target, where gold actually gave the indication on the first side also. As you can see, gold gave an indication to be able to go to 3,700. So that was where we were aiming. Now we're using 15 minutes to aim for that TP. you know So as you can see, it was a good, nice 1:4 trade. It could have been more for others based on your risk management, and how you would have taken the entry. But for me, I prefer to put my stop loss, just under these this higher low which was created, and which we know that anything below this level of resistance, anything below it would be bullish, would be bearish actually, and anything above it would be bullish. So because I'm taking longs, and we know that overall the chart is bullish in terms of 4 hour, and we needed that break above these highs, to confirm the bullish movement to the upside, and also knowing that we are now above, the previous high, where we got the indication the first time that anything above these previous highs would be bullish, which would be exactly, giving us which came to give us this indication on the upside that anything above it will be bullish, the way the indication actually started to happen. So pretty much, that's how we got the gold entry. So I'm just gonna break it down to you also, on the side, so you can probably take some notes. Whenever you are on a, let's say you are in a uptrend, what you wanna see the pair breaking the highs. You wanna see the pair breaking the highs. You wanna see it breaking those highs, and giving you those indications, and continue to break the highs, and everything else, and um yeah, pretty much. So that's what you want to see, it breaking the highs. As it goes up, you want to see breaking the highs. So this movement here is what we call the indication. This movement here is actually a continuation, but this here breaking the highs, the previous high, is the indication that you're looking for. It shows that it can buy above this level. So now you can know that okay, anything above here would be bullish, and anything below would be bearish. Because now this is a correction and you don't want to find yourself trading against the market. There's no need for you to be in a single entry, be in a single direction where the market is currently going, be trading all the time. You need to wait. Most of your trading, you need to wait it out. You understand? So same thing, even when the market is actually, on a downtrend. When the market is on a downtrend, you just need to wait it out. Just need to wait it out. Same thing also. Um, Same thing also. You just need to wait it out. Learn to wait it out before the market actually gives you the indication. So the best time to trade is when the market is giving you a high, a high, and then give it broke above those, give with an indication, and it's actually correcting to it's correcting within the previous high. It's correcting to those level. So your entry would come from above here. That's where your entry will come from. But you need to scale down. You need to scale down to these, smaller time frames so you can be able to get that perfect entry. You need to scale down to those small time frames so you can get a better perfect entry or a snapper entry, as many will call it. You understand? So you need to scale down. You need to scale down. That's how it is. Same thing. You need to be where the indication actually happened the first time before the market started to correct. That's where you need to be, right? That's where you need to be. So you want to focus on that time. Don't try to ride a wave when it's already up and there. You say, maybe it will continue. No, there's no maybe in the market. You need facts. You need data to back you up. That's what you need. You understand? You need that kind of data to back you up. So the previous data which happened when the market gave you an indication and it's corrected, then you use that previous data which happened to look for more opportunities on the upside. Not while it's already going to the upside, then you want to take an entry at the highs, you'll get crushed. But yeah, I'll drop. I'm thinking of doing a 7 day, kind of course. I'm not sure, but yeah. Let me know your thoughts on this comment sections below. If you want that 7 day course, and I'll be breaking it down in terms of also tools that you can use to help with your trading and how to use them. Indicators actually on TradingView that you can use to help with your marking your highs and lows, much better, and higher highs, higher lows, lower lows, lower highs, so you can be able to mark off those levels. So we're not without stressing whether this is a level or this is not. So you can focus on refining your entries and so on. But yeah, guys, thank you very much. Don't forget to like and subscribe if you like the video. Yeah, peace out.